Markets rally, still betting on that US-Iran peace, but oil futures and gas prices are also rallying. So markets finished the week up nearly 1% as the ceasefire holds, but minimal movement on reopening the strait. Let's quickly recap. Monday ticked up despite weakened negotiation talks falling through. Then, Tuesday dipped led by an AI bubble concern from reports that OpenAI's growth is slowing down. Then Wednesday ends essentially flat after a messy Fed meeting left future rate cuts in question. However, Thursday bounced back on strong big tech earnings. Finally, Friday rallied on renewed optimism for US-Iran negotiations to resume. So what's the deal? Well, at first glance, the ceasefire is holding. However, the Strait of Hormuz remains closed, the US blockade is still up, and at least publicly, negotiation progress has stalled. It's why oil has surged 8% this week and gas prices have jumped 9%. Meanwhile, slightly lagging data, but March core PCE decelerated to 0.3% month over month. It's an improvement from the last few months, but still stubbornly high. And that's a problem for the Fed. Rates were held flat, but we're seeing some internal fighting. Some members are disputing the idea that the Fed is just waiting to resume cuts. It seems they prefer the outlook to be seen as a question mark rather than just a rate cut pause. So what now? Well, it's a new month, which means new jobs data is on tap. We'll see how resilient the labor market was in the second month of the heightened tension. For now, optimism is driving the rally, but markets will eventually have to acknowledge the costs of the long-term standoff. Still a lot of moving parts, so stay tuned for more updates.